Welcome, everybody. Kia ora koto, ko Stephen mo toku ingoa. It's great to have you all joining us, and thank you for being here for this session number 2, where we're going to be looking at the Charities Act bill and some amendments which are proposed. And this session, we're going to be looking at it through the lens of reporting requirements and an accounting perspective. And so some of you were on the call last week, and I think you would have heard me talking with my colleague Sophie about some of the changes which are coming in the bill. And those changes that was like a high-level overview of some of the key things which are changing. So in this session, we're going to be talking with a different perspective. And we're really lucky to have the Chartered Accountants of Australia and New Zealand join us, and Zoe is here from them. Just before we get into that, really briefly, as background, because some of you didn't join the previous call, the Charities Act has been around for a while now. It's getting close to 20 years, and it's needed a refresh, needed a bit of a look at it. And that has been ongoing now for about 5 years. I think it was 2017 when the new government came in and they said they would be implementing a review. And so that's where we're up to. Because of COVID, because of other pressures, because of various things, it's been quite a delayed process. Like, I think it's taken longer than anybody thought. But in September, the bill was put forward for its first reading. And that means that the select committee process got kickstarted as well. There was 6 weeks for people to respond to the select committee and provide input. And some of us felt like that probably wasn't long enough. In particular, shout out to Sue Barker, who is another lawyer and we do work together from time to time. And so we crafted a letter that went out, and 120 of you as charities signed the letter. And fortunately, the select committee agreed with us that it wasn't long enough. So we now have until the 9th of December to provide submissions on the charities bill. So that sounds awesome, but it's already the 15th of November as at the date of recording this. So time speeds by at this time of year. And so what we're really trying to encourage people to do is to read the bill for yourself, think about it from your organization's perspective, and then make a submission. Like, this is the point of democracy. This is the time when we get to actually stand up and be counted. So hopefully, if you take nothing else away from this session, there is an encouragement that you actually step up and provide some input to the people about what the bill says. So that's a little bit of background, just so some of you weren't here at the last call. And my colleague Sophie has also on this call. So in the chat, you'll see that she's putting some links to things. So we've put the link to that previous session. And also we've done an article outlining the top level changes and how to make a submission. A lot of people think making a submission is very difficult. Like, ooh, it's like going back to university and writing a big essay with lots of footnotes. In fact, it can be very short, could be one sentence, could be one paragraph. So in the chat, you can see the link to our article about how to make changes, how to submit what you think of the changes, and then what the key changes are. So having given that background, I also did want to say our lens on this is that we are doing a lot of work as a purpose-driven team in our law firm. We've got about 80 people in our firm, and we're really trying to push in terms of for-purpose organizations and supporting them, whether they're incorporated societies or charities or businesses. So there's 6 of us in a team of the 80 people who are focused really a lot on this area, which has led to this session. And I was so grateful when we found out that we had an extra month to submit. I reached out to Zoe that day and said, hey, do you think we could run a session? Because I think people would be interested on the reporting and accounting side of things. So that's really the intention of this session. So Zoe, I'm going to bring you in now. That's enough of my preamble and giving a bit of the history. Would you be able to maybe set the scene in terms of where you sit within CANs, or the Chartered Accountants of Australia and New Zealand? Like, what's the hat that you're wearing, and why do you care about this?
Thanks, Stephen. Tēnā koutou katoa, no mai haere mai, ki tēnei huiata, ko Zoe toku ingoa. So yeah, hello everyone, welcome to this online session. And thanks for joining this really important conversation. So yeah, for those of you that don't know me, my name's Zoe, and I have worked in the policy and advocacy team here at Chartered Accountants Australia and New Zealand for over 10 years now. I am incredibly passionate about the for-purpose sector. So, you know, my area of focus within policy is financial reporting and broader reporting, obviously. It's not just all about the financials, and we're seeing that more and more now. So yeah, bringing together reporting, assurance, and for-purpose sector is yeah, where all my passions collide. So yeah, really, really great to be with you today, Stephen.
Yeah, thank you so much for joining me. And we sat down now a couple of weeks ago, because we're both actually based in Otatahi, Christchurch, but also both of us are very national focused. So it was great to sit and talk with you about some of the changes. So the format for this session is we're just going to have a conversation, because I personally learn better if I'm listening to people talk in a dynamic way, rather than it being like a lecture and point number one, point number two. So we're just going to have a conversation, and our aim with this is that it will raise your awareness of some of the key provisions in what's proposed, and then you'll be able to make your own decisions about, is this a good thing or is it not a good thing? So Zoe, let's start at the very beginning in terms of what is it that is being proposed from your perspective in a reporting accounting side of things. What would be some of the proposals that really jump out at you? And then let's talk in a little bit more detail about a couple of those.
Sure. So essentially the main area of focus for me, I guess, is the financial reporting requirements for very small charities. So obviously you'll all be aware at the moment that all charities have to comply with the XRB accounting standards to prepare their financial statements. So the XRB has an accounting standards framework that consists of a multi-tiered approach, so that reporting requirements are proportional to the size and complexity of the charity. There has over the last 5 years that requirement came in, because that came in with the Financial Reporting Act 2013 amendments. It's been increasingly apparent that very small charities are still finding that requirement quite challenging. So this bill proposes to give the Chief Executive of the Department of Internal Affairs the power to exempt a class of qualifying charitable entities from the requirement to prepare financial statements in accordance with the XRB standards.
Ideally recognises income in the period that
I'll just mute there. So there's a bit of terminology there that I think we probably need to explore for a start. So
yeah, well, let's talk about that, because one of the things that strikes me is that there are about 28,000 registered charities, right? So it's quite a large number. And what you're talking about is for some of the smaller ones, right? Like that's what we're getting at.
Yeah, it would be for very small, but I guess that's one of the points, that the definition of qualifying charitable entity isn't defined in the bill. It says that it's a charity whose total assets and total operating expenditure are below a threshold that's prescribed by regulations. So we don't have the full picture there about what they're envisaging might be in that definition. But we do have a bit of an idea, because if you look at the DIA's recommendations in their papers, they're suggesting annual payments under $10,000 and total assets under $30,000. So that
this
might
is
not
really
be where it ends up, but that's an idea.
Yeah, and this is really getting at the charities which are very small. You know, they're operating on a shoestring budget, and it's all volunteer based, and probably there's just not the capacity even to necessarily comply with a lot more rigorous accounting standards and things, isn't it?
That's right. Yeah.
So what do you think, because this does relate with the XRB, and for those who aren't familiar, that's the External Reporting Board, which sets the financial standards. So there's probably like different philosophical points or perspectives on this. Can you share with us what those two might be? Yeah,
so there's definitely two points of view, very distinct points of view when it comes to exempting small charities from having to prepare financial statements in accordance with the XRB standards. So the first view is that, yes, it's absolutely reasonable. It's a low risk approach to address the relatively high levels of non-compliance with the XRB standards. It's recognising what you just said, Stephen, that small charities are often staffed, entirely by volunteers. They've got very little financial expertise, relatively small sums of funds involved. So they need, to make compliance easier for those entities. On the other hand, however, there is a view that because the XRB's approach to setting standards is that it's proportional to the size and complexity of the entity, that the current requirements are appropriate, and that compliance with those standards is really important from an integrity and public confidence perspective. And that this is really not about regulation, it's about accountability. And this is just something that you have to do in order to get the benefits of being a registered charity.
Yeah, it's definitely interesting. And one of the reasons we're doing this is to alert people to different perspectives, because this could be one of your submission points, right? If some of you on this call, I know that you come from very small charities, and others of you are from big charities. So what do we think about this? It's going to vary depending on your perspective. And I guess part of it, Zoe, will be perhaps in a submission, somebody might say, well, I agree with this, and I think the threshold should be this or that, right? Like that would be a practical way to provide helpful feedback.
Definitely.
Yeah.
But there's a few more considerations that we can go into that can help, give you a holistic view of other mechanisms that could provide, that same accountability, perhaps. And it's really about whether you want that certainty of an exemption in the Act, or the more uncertain approach, which seems to be the kind of direction of travel at the moment, because even though there's a power to exempt, doesn't actually mean that that power will be exercised.
Right. So just tell us more about that, and in particular, thinking about people who want to make a submission on this point. Yeah, unpack that a little bit more.
So, as I said previously, the bill proposes to give the chief executive of the DIA the power to exempt a class of charities, very small charities, but in practice, that person, that individual, might not, may choose not to exercise that power, and we know from the policy decisions that have been published that the Minister for the Community and Voluntary Sector is really hopeful and optimistic that the XRB, in their work that they're doing to revise the Tier 4 standard, will address the issues around the perceived complexity and from what we've seen of their work already, because it has, the revised standard has been out for consultation already, that they have significantly, well, they're proposing to significantly simplify the Tier 4 standard. So if it is the case that, it's perceived to be as appropriately or sufficiently simplified, then that power may never be exercised. So I guess that's the first unknown. So, if you do support an exemption, then you need to think about whether actually this mechanism is the right mechanism for the exemption. And I don't know much about the kind of the process that person needs to go through to actually exercise the power. Like, is there any public consultation required? Are there any other precedents in law that we could look at to see how that would work in practice, perhaps?
So there's a bit of uncertainty, even though there is some a way forward. It's not clear exactly how it would play out. So that could be the subject of the submission, right? It could be, well, I see the intent behind this, but I think this, or, because the other option would be to hardwire it into the act itself, right? Like, here's the threshold and it's this number, and then there's no discretion. It's just, this is how it works.
Which is what they've done for incorporated societies.
Yeah. Okay, well, let's move on from that topic, but I think it's a really important one. So that's why we spent some time on it, because there are a vast number of charities. And I'm also aware that many of you joining are accountants or professionals who are providing advice to your clients, who maybe are saying, what should we submit on? Or even in your own role as accountants, you might be wanting to submit. So hopefully this is helpful to really give you a steer on what are the issues that are going to be facing people. I also wanted to say in the chat, we all know how to use chat these days, so feel free to drop questions or even comments. I think for both of us, we're still writing our submission. We're still learning. We're very open to hearing from others on the call. If you've got a different perspective or you want to add something, that's fine. We're happy with that. So I'm just wondering if we could, do you mind actually, for some of those on the call, do you mind just outlining the tier system that we have? I know for some people this will be easy, but the tiers 1 to 4, just before we move on to another topic, I think that's worth just a refresher.
Yep, sure. So the largest charities would be reporting under tier 1 if they have over 30 million of operating expenses. Below that, it would be a similar standard to tier 1, but with reduced disclosures. And then if you get below 2 million operating expenses, you fall into tier 3. So now I should say that the tier 1 and 2 standards are based on international public sector accounting standards that have been modified for to include not just public sector, but for purpose entities. The tier 3 and 4 standards are domestically developed standards, so they're world leading in that regard. They are, instead of being a suite of like 38 standards that you have to comply with, they are a single standard. With the revisions that are underway, it could be bringing the tier 4 standard down in particular to just 16 pages. So I know that when you talk about accounting standards, for some people that can sound really quite scary. But when you do get down to those smaller levels, and the main difference between tier 3 and tier 4 is the basis that you do your accounting. So some of you might be familiar with accruals concept. So the tier 3 standard includes some accounting-y things like depreciation. It has a balance sheet, for example, that balances, whereas the Tier 4 standard really is just, what's going in and out of your bank statement, essentially, at its most simplest.
Yeah, and I guess one of the points is that there's always revisions and changes. So XRB has been consulting on some of those lower tiers as well. Maybe the encouragement is just keep your eyes open, because there's always something where there's tweaking going on and there's changes, right? Yeah,
not too frequently, though, you should say. This most recent change is fairly significant, but it's because the standards were brand new. When they were 5 years old, the XRB has an obligation to do a post-implementation review to see how they've been bedding in and working in practice. And now these are refinements, essentially. But yeah, the Tier 4 standard, I should have said, sorry, the threshold is 140,000 operating payments.
Yeah.
So when we're talking about this potential exemption, it is a subset of the Tier 4 entities, just the very, very smallest ones.
Yeah, no, that's really helpful. Thank you. It just helps to set the parameters of what we're talking about. So if it's okay with you, I'm going to jump from those smaller entities, the ones that are at the very shoestring budget. There's not much available for resources. And can we just focus on the big end of town? So the Tier 1s and the Tier 2s. And in particular, I'm interested in your take on this shift towards reporting about accumulated funds. And I'm just wondering if you could maybe describe that. I already talked about it in the last session, but I'd love to hear your take on it, or what's your perspective? Because the key thing is, I had somebody write to me afterwards actually and say, I can't see it in the bill, but it's because it's going to be it's not there. Yeah. You're just making it up, but it's actually going to be in the annual reporting requirements for these charities. So do you want to maybe outline what your understanding of it is, and then we can have a bit of a chat about that?
Yeah, so my understanding is it's for charities in tiers 1 to 3, that they would be required to report the reasons for the accumulation of funds. And that's not just cash, it's all assets and resources. So you may have, large assets, but not much cash in the bank, or vice versa. But it's really around what's the purpose that they're being held for. As Stephen said, it's not a legislative change. The policy decision was that this is going to be implemented through a change to the annual return. So the annual return form is going to be, the form and content of the annual return form is going to be subject to public consultation around, I understand, July next year. So what charity services are waiting for is for this bill to be passed, and also for the XRB Tier 3 and Tier 4 standards to be revised and issued. So then those two moving parts have stopped moving. And then the idea is to align the annual return, because there's a different annual return depending on what tier you're reporting. So align the annual returns to the accounting standards. So I guess we can get an idea of the direction of travel of what's actually going to be required in the annual return by looking at what's required by the accounting standards. So there's already a requirement to disclose the nature and purpose of each reserve within accumulated funds. And then if you look at the consultation paper, or the exposure draft of the Tier 3, the potential new Tier 3 standard, it just takes it that one step further. It says, I'll just quote it: an entity shall disclose information that enables users of its financial statements to evaluate the entity's objectives, policies, and processes for managing its accumulated funds. So, and then it kind of gives a bit of guidance. So it says, in meeting this requirement, An entity shall disclose a brief description of the entity's general plans for applying its accumulated funds towards its stated purposes. So for me, I know, again, there's varying views, and I think it's really great to have different views so you can hear all the views. But for me, I guess this is a communication tool. So if I'm looking to donate funds to a charity, I can look at that disclosure, and it gives context to the level of funds, be it cash or assets that are being accumulated, because I might look at a charity and think, oh, you look really, really rich, I'm not going to donate to you. But actually that's because of the result of years and years of prudent saving to potentially construct a brand new building, you know, which is actually something that I would want to contribute to. But you see what I mean? Without that additional context, it's really hard for me as a user of financial statements to understand how that charity, I guess, is applying those funds to its purpose.
No, that's really helpful. Thank you. And I think it is like stepping back from the detail of it. There is a policy point here, which is that, well, there's a reality point as well, which is that there are a number of charities which do have a lot of funds in bank accounts earning nominal interest rates. And there is a question, I'm going to give the other perspective too, so don't worry. There is a question, which is, you were set up as a charity decades ago. You're sitting on tens of millions of dollars potentially. What are you actually doing to advance the charitable purpose which you were set up for? And I do worry sometimes charities get so enamored with themselves in the sense of we're perpetuating the legacy of the beginning. They forget that they were set up to solve a crisis or a problem. And actually the rainy day has come and it's time to start using the funds to solve the problem or to do their best, rather than perpetuating, we want our organization to be here for the next 500 years. It's actually, we want to solve the problem. So there's that sort of a perspective. But then there's the other perspective, which says, well, wait a minute, this is just a private arrangement between Stephen, who likes this charity, and I gave the money. Why is it that the charity needs to report in a public way on what that money is being used for? So there's kind of a, you know, that's more of a philosophical perspective. Like, is it up to the government to be going into how charities are using funds? So there's kind of interesting dynamics here on this one. I'm not trying to land either way. I'm just trying to give different things that I've heard people talk through on it. So yeah, so it sounds like this one, we could probably mention it in our submissions, but it's actually something that's going to be consulted on later on.
Yeah, well, I'd say it's already been consulted on as part of the accounting standards, but there will be a chance when the annual return is consulted on. If you think it's, you know, taking things too far, then that's definitely the time to have your say. Yeah.
Okay, that's really helpful, because it's definitely been a talking point, particularly amongst larger charities who do have funds or do have assets, and there's some question marks like, what does this actually mean? I think maybe putting it in a simple way, though, it could just be a very short statement about, we have $8 million in this fund, and the purpose is, like you said, to build a new youth and community center. But we don't have enough to do what we want to do yet, you know, like that would be it, right? It's not that complicated.
It's not asking yet for, you know, all the details of where every single dollar's, you know, going to be spent. Yeah. Just a really brief description. Yeah.
Okay, that's great. Well, thank you for that. Let's move on to another topic. What jumps out at you that we haven't spoken about already?
For me, I think there's another area that we should touch on around going back to the very small charities. Because as I said, there's a lot of unknowns, and I guess one of the other unknowns is, you know, if that power to exempt, you know, is given, there's a lot of what ifs here, but if it's given, then this class of small charities still have to report what they're calling minimum financial information. So again, we don't know what this is yet, though, because that is also going to be prescribed by regulations. So it does give a idea. It says it could include information about a charity's income, expenses, assets, liabilities, mortgages, charges, other security interests, related party transactions, and donations. That's quite a long list, and that to me sounds very, very similar to, dare I say it, what would be reported under the Tier 4 standards. So I just question whether that's the right approach. You know, if you're giving charities an exemption from using the XRB standards to prepare financial statements, but then you're asking them to provide financial information, but then you're not giving them any other guidance of how to recognize, measure, report, you know, present, disclose this information, or a template that they can just fill in the boxes. Is that really achieving the policy objectives here of lessening the compliance burden on these smaller entities, or is it actually making the situation worse?
It's an interesting point. So that might be something people want to submit on, is what actually will the requirements be? And it's like we're taking away the apple and replacing it with an orange, but not giving as much information about what's needed about the orange, right? It's like it's a good point. And I guess one of the things is that charities will still be required to do some filing, right? Like we're not saying that the lowest charities are just completely off the hook and we don't really care about what you do and you don't have to say anything.
No, so I think it all goes back to that annual return, and that's why I think that's going to be the really critical final piece of the puzzle wherever we land, or, you know, especially if we land with saying, you know, very small charities don't actually have to do any sort of, you know, financial reporting separate from the, I guess, financial information that's asked for in the annual return. Because for me, you know, if you're wanting certain information around, you know, total income, total assets, etc., that's all collected in the annual return anyway at the moment. I'm presuming that kind of thing won't change. So is that not a sufficient mechanism to gather that data and then drop the whole financial reporting requirement altogether, which coincidentally is also consistent with the approach taken in Australia? So if you look at the ACNC requirements, which is the charities regulator in Australia, all small charities, obviously they have their own definition of small, they don't have to do annual financial statements. They just have to file an annual information statement, which is equivalent to our annual return, and that collects the financial information that is needed for the register and for people to be able to search the register. So yeah, that's another thing to think about.
Yeah, no, that's really helpful. Is there anything else that is done in Australia that we could be maybe learning from for over here? Because I always think, like, I practiced as a lawyer in Sydney for 4 years before moving back to New Zealand. And as much as we have our rivalry when it comes to cricket and rugby and everything else, ultimately they're very similar jurisdictions, you know, and even looking at the logo behind you, Chartered Accountants of Australia and New Zealand, like there's a lot of things that we could learn. And I do worry sometimes that there's this culture in New Zealand of number 8 mentality of we've got to make it better. We've got to, from scratch, start over and come up with something new. I don't know, maybe there isn't anything, but it's always worth reflecting on, like, what's done there and then what's done here. And if we're about to look at the Charities Act and have changes, could we learn something from what's done there?
Yeah, I think in this context, that's probably the main thing that we could look to. And, you know, likewise, there are things that Australia look to us they're currently implementing a tier 3 or consulting on proposals for a tier 3 accounting standard, for example, to reduce the compliance burden for their smaller not for purpose entities. So I think there's definitely areas we can learn from each other.
Yeah, no, that's good. So let's think through, is there any other proposals or changes that you think we should highlight to the listeners? And also, I'm keen if people right now, I see there's a bunch of you on here. Can you use the chat and let us know if you've got questions? I think there's about 2 or 3 there, which we're going to turn to soon. But while we're talking on this next point, Zoe, people can type in their questions. Is there anything else that you wanted to mention? Like maybe we could talk about what if there's non-compliance? What is some of the fees or the implications of that?
Yeah, no, definitely. There's just one more thing on the, I guess, the exemption piece that we haven't mentioned, and that's the use of the word class. Now, I think that's another kind of unknown that, to me, that makes me think that it could possibly be even a subset of charities that are below whatever the threshold, that is proposed to be in regulations. So again, I guess that makes me a bit nervous around, are we now carving out somehow even further, within that very small charity threshold. So that's one of the things I would question is what is a class? How is that determined? And is that actually going to meet the policy objectives? If we're saying, well, you've got 2 entities the same size, one would have to report, one wouldn't, on what basis? But yeah, in terms of so non-compliance with the reporting requirements. So at the moment, and this isn't, there's no changes proposed in the bill for this. Every charity and the charity and every officer of the charity are liable on conviction to a fine of up to $50,000. So for me, that seems like quite a big a hurdle, because you have to be convicted, and obviously a large amount of money. So I guess I'm wondering, are there any other regulatory tools that we could put in the regulator toolkit that then scale up to the the conviction? There doesn't seem to be any sort of administrative penalties, talking in the hundreds of dollars as opposed to the tens of thousands of dollars.
Right, you're either in big trouble or not at all. It's Well, that would be something people might want to provide input on.
Yeah, I mean, if we're wanting to encourage compliance, some sort of penalty might help, if as a bit of an incentive. But yeah, I don't know, what the stats are on how many charities and officers have been convicted and actually fined for not reporting in accordance with XRB standards yet, but I wouldn't imagine it's very many.
Yeah, I think you're probably right. Okay, well, that's really good. Is there any other proposals that you wanted to mention? Otherwise, we might turn to the questions in the chat. I did want to highlight that you're involved in something which is an international group, right? Looking at developing international reporting guidance for for-purpose organizations. So I'm going to get Sophie to find that link and put it in, because I think people might be interested in that. And what's your role? You're the country champion, is that right?
I don't want to confuse the landscape here, but yeah, I'm the New Zealand country champion for an international initiative that's essentially developing guidance for non-profit organizations accounting guidance, sorry, I should say. So it's really aimed at the developing countries. It's not for countries like New Zealand that have an accounting standards framework and legislation that governs all of this already. It's really for those developing countries that don't have any sort of framework for accounting or reporting, and there are quite a few. So I guess it would be of interest to you if you are a charity that donates money overseas, in terms of thinking about what kind of accountability documents you would get in return for that. But yeah, so yeah, I mean, of relevance to what we've been talking about today, is specifically around accumulated funds. I wrote a blog recently that talks about can NPOs make a profit, essentially? And apologies for the use of the term NPO, but that's the term that the project has adopted.
Yeah.
But yeah.
No, that's great. And Sophie's just put the link to that in the notes here, so people can click it and find out more. I just think it's these sorts of chances we can share information and we can let people know. And I know that I recognize many names in this conversation, and I know many of you are accountants, and this might be of interest to you. So that's why I thought it was worth highlighting, because ultimately we can talk specifically about our situation in Aotearoa, New Zealand, but also we are part of a bigger ecosystem. So if it's helpful to know, like I'm involved with the Global Alliance of Impact Lawyers, which is quite helpful to know that there is such a thing, right? So I think it's good to share information on this this topic. And then, yeah, Sophie's just put a thing in here, a link to my thoughts about not-for-profit and for-purpose. So I don't want to trip people up on it. Like, I just think that it's a bit odd that we describe the whole sector as, oh, we're the not-for-profit sector. Like, why do we define ourselves by what we're not instead of what we are? Which is why I've been writing about it and encouraging people to consider saying we're in the for-purpose sector. Like, here's what we're for, and not defining ourselves by the fact that we are not something else. Like, we're not companies, we're not about profit, we're about purpose. So anyway, that's underlying some of our comments has been that that little article is about why do we describe it this way? Cool. Well, this has been really helpful, Zoe. Is there anything else that you wanted to mention, or should we jump in and see if there's any questions that we can riff off of in the chat?
Yeah, let's go to questions.
All right. Well, why don't we work backwards? So Beth has just put one in. Is there any insight on when the new climate-related disclosures might apply to the for-purpose sector? So that's a great question. Do you want to?
Very timely. Yeah. So I know that MB was aiming, shall we say, to get a discussion paper out this month on the extension of that regime. Now, I'm pretty sure the for-purpose sector is going to be a long way off yet. I think we're going to be initially looking at expanding it beyond those, 200-ish entities that it currently applies to. But yeah, we will wait and see. I haven't seen it out.
Yeah, I don't think we have a time frame on it, but it's a great question. Thank you for that from Beth. And I've about a year ago joined the XRB's advisory panel. So that's XRB is one thing, and then the advisory panel, it's basically a bunch of us sitting in a room giving them input on what we're seeing. So through that, I've been seeing the process behind the scenes of this rollout in terms of climate-related disclosures. And the thing that I think people are getting confused about is that it's not for every company. It's actually quite a select number. So you mentioned 200. I think that's about the number. It's like the top companies. But I do think that it's an indication of the trend and where we're headed towards. So it wouldn't surprise me if it gets rolled out into other areas as well. The other thing that I see people getting confused about is that when it comes to climate-related disclosures, there's almost a fundamental philosophical point here, which is that these disclosures is about how will the climate change and all of these factors affect the company, rather than a flipping of how is the company affecting climate change. So it's kind of a subtle difference there, but if you think about it, it's a massive difference, because if you're talking about your company's role in the climate change crisis and in emissions and things like that, that's quite different to how is the company being affected by these other issues. So it's just to be aware of it, I think, because there's a bit of confusion about that. But it definitely is there's no going back from this trend, and I would say rightly so, because I hope that my grandchildren and my great-grandchildren don't look back at our generation and say, you knew what was going on and you didn't take measures. So to me, this is a step in the right direction, but it's just one step. And since I'm mentioning it, Section 131 of the Companies Act is now open for submissions. I checked and there's 54 days left. So that's Dr. Duncan Webb's bill, which will provide for more to be considered when directors are exercising their director duties, things like the treaty, employees, customers, the environment. So it's quite a big shift. Some people are arguing that it's too restrictive. You shouldn't be having that in the legislation. I'm arguing that it's welcome, because it will be a reminder for directors of what they need to think about when they're acting in the best interest of the company. So I'm not going to diverge us off totally into that, but it's an important change. Submissions are open now. They finish in 54 days. Have your say. I just wrote an article for the Auckland District Law Society about it. So I'll get it to Sophie and we can put it in the, we'll send it in an email out afterwards and you can have a look. So thank you for that question. Was there anything else on that topic, Zoe, that you wanted to say on climate related disclosures, or we're getting some more questions here? So
the other I guess arm of that consultation that we're expecting from MB is around the regulation of assurance practitioners, because there is a requirement in the Act to have the greenhouse gas emissions disclosures in the climate statement assured.
Great, thank you. All right, well, let's work our way back. Thank you for your comment here, Jason. Let's cover that one since it just came in. Anything new regarding disclosure of remuneration payments and other benefits to officers for large charities? Some large faith-based organizations seems to rely on comparison with the private sector to justify paying large salaries. That's a great question. And actually, I just got an email this morning from somebody saying, is there some objective list of how much CEOs of charities are being paid within a New Zealand context? And I had to write back to the person and say, not that I'm aware of. I don't think there is like a benchmarking survey that's been done. I know that IOD does this for directors and compensation. But in my experience, charities are so different as well. Like one charity will have a $20 million budget and the next charity will have a $25,000 budget. So it's really hard to say, well, the CEOs of charities get this amount. But Zoe, have you come across anything? Because I'd love to know if you have.
No. And I mean, that's not an area that would be, I guess, legislated. I would have thought that's more of a business decision, but organizational, those charged with governance decision. But disclosure of, I guess, fees, employee costs is definitely covered in the accounting standards, even at the the tier 3 level, and it's also, it would be covered under the related party transaction disclosures as well. So definitely a requirement to be completely transparent about the quantum, but not necessarily having to justify why you pay a certain amount to a certain person.
Yeah, That's good. Thank you. Yeah, I really wish there was some sort of a guidance or survey, but there isn't that I know of. So that's the short answer to that one. Let's go back through the chat here. So Peter had a comment. This is back earlier on, and this was about tier 3 and tier 4. He said, the issue I see is that not many preparers of performance reports for those smaller charities have actually read the standards and their contents, and they may simply complete the templates to get the compliance down. If this is the actual situation, then why have standards? I think in the past, both XRB and charity services have provided education, but I'm uncertain as to whether people have understood the details. So I think that's a valid point, isn't it? Like tier 4, you've got a template to fill in and there's some boxes and you need to put something. So you copy paste from somewhere, and is it really doing what it's meant to be doing anyway?
Yeah, I think that's a really good point. And it goes back to the point I raised earlier around those very small charities. You know, if you are just essentially filling in the tier 4, 2 or 3 page template, is that really achieving the policy objective, or could that equally, could you get the same outcome through completing the annual return, which is asking exactly the same information? Yeah,
exactly. And then Caleb's got one here. If the requirement to report on reserves and resources is not legislated in the bill or act, can charity services make this a mandatory field on the annual return?
Yes, the form and content of the annual return, I think the Act basically gives the chief executive of the DIA complete decision-making over what needs to be, or over what the form and content of the annual return, which is quite different. If you look at, incorporated societies, for example, the Act says that the form and content has to be prescribed by regulations, and the regulations prescribe, exactly what has to be in the annual return. So pros and cons of both approaches, obviously. The charity services approach gives more flexibility, I guess, to change as user information needs change. Incorporated societies approach, obviously harder to make changes, but more certainty.
Yeah, I think you're right. Simon's put a comment here. Is the disclosure of the assets and their usage actually something worth submitting on? Or because it's an action that's coming from this, is it something we can't impact right now? I don't know. My view is just submit, make your voice heard. If this is an issue that you care about, it might be looked at in the future. But I think the policy people and the people behind the scenes who read all the submissions, they do take note of themes and trends that come through. So that would be my first reaction to that one.
I think if you're saying what you want in the annual return, it's probably not the right place. But if you're saying, hang on, the bill doesn't include anything in this regard, and I think it should be actually hardwired into the Act, then obviously that's something that you would want to submit on.
Yeah, that's a good point. Alan's put something here. Are they going to close loopholes for charities like Sanitarium? So that's a great question, and it's something that I hear a lot of, but it's a loaded question because that's one perspective there. Is it a loophole? This is a fascinating area. If we were doing a first principles review of the Charities Act, is this something that would be looked at? I think what's implied by the question is that should business income be exempt from tax if it's going to the charity, which is then using it for charitable purposes? My view is actually that it's okay, because I think charities should be encouraged to diversify their income streams and to start businesses and to be able to get funding in. And I think as long as the charity can show that it's using the funds it's getting to advance the charitable purpose, then for me, I don't mind that there is tax concessions there. But this, as many topics today, this is more of a philosophical argument about, is it good or is it not? And yeah, Zoe, I don't know if you want to weigh into that one, but
not really.
Yeah. Yeah, I just look at it, and I know what's implied by the question as well is that sanitarium, ultimately there's a religious organization behind it, but I actually look around and I see religious groups all over the place doing a lot of good in society, and they're actually getting funding from various businesses or impacting society in positive ways. So I think it's I wouldn't want to see it stopped, but I know there are people who strongly disagree with that. So there we go. Thanks for your comment, David, about the use of the term not-for-profit and for-purpose. It sounds like you agree. Let's see. And then we talked about Jason's one. And maybe the last one here, Alan had put, would that include scope 2 and 3 emissions? I'm guessing that's back to the climate change one. Have you got any insight on that one?
Yeah, I just responded to Alan because I wasn't sure if we'd get to that one, but yeah, essentially it's scope 1, 2, and 3 emissions. But there, if we're talking about specifically the assurance aspect, I think there is potentially some talk about some transitional provisions around scope 3, given I guess the level of maturity of reporting systems and data capture challenges in the initial adoption phase.
That's great.
But eventually,
yes. Yeah, well, the whole area, I can guarantee you a year from now, things will have changed again in that carbon capture, emissions. What do we report? What don't we report? So I'm just conscious of time, and we want to respect everybody's time. We know you're going to need to drop off for other things. So I want to say a huge thank you to Zoe for joining me today and sharing that lens on the changes from an accounting and sort of regulatory perspective. Thank you so much. Really appreciate it. And I wanted to finish off by saying we do have a bunch of resources and guides that we've been putting out. So this is one of them, which is Charities in New Zealand, a legal handbook. And I've also recently put out one which is looking at faith-based groups and their governance, and also one on the Incorporated Societies Act, which we didn't really touch on. We probably could have actually, but we didn't. And so that's a guide to all the changes that are coming up. It's just a time of a lot of change. And by the way, don't forget the regulations consultation on that finishes next week. So I'm going to be working on those submissions before I turn to the Charities Act ones. Yeah, so we are doing a lot of work across the country. I know a bunch of you are located in different cities from me, but if you have questions and things, feel free to drop me a line. I'm always happy to respond and see if we can support you. So thank you so much for joining us today. We have recorded this because a bunch of people said they couldn't join, but they would have liked to. So if you're listening to it, thank you for listening, and thank you for joining us today. And a big thank you to Zoe and Ken's. Really appreciate your insights and input today. Cheers, everybody.